Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's a Federal Reserve meeting next week, and so that means that this week probably, well, we don't have a ton of economic news this week, so probably going to be a relatively quiet week. But, you know, you never know. I've been sitting over and, you know, eating breakfast. It took a little bit longer to eat breakfast, and I was hearing a lot of clicking, so I'm already kind of some signs that maybe the market is a bit more active than normal. But I can't really, something happened. It didn't, my machine, I guess, thinks that the monitors changed or something, because all of my Jigsaw windows opened up on the wrong screen. So if you could just give me a minute to fix that. Let's see here. Okay, there's that. I don't know what the deal is, because why would Jigsaw do it wrong, but not Ninja Trader? So I don't think that it's because something changed with the monitor. I think my Jigsaw workspace just got screwed up. We'll see. And sometimes when I get errors like this, Jigsaw will do it again the next day, right? So let's see. Error window. There. Okay. So let's see where we're at this morning. Well, overnight session, pretty strong move up in Treasuries. That's actually way bigger than I was expecting to see. So what is driving this? Well, there was a change in the Japanese yen because the ruling party suffered a pretty big defeat, although it was not as bad as feared. That seems to be lifting the Treasuries. Well, I'm surprised that it's just that much. But that kind of puts us back into some of this range. Do you think that we can get all the way back up into the 112s again? Anything over 111 is I think constructive. So S&P 500 looking pretty okay overnight. Oil, man, I don't remember what the story is in oil, but they are down a little bit. Gold and silver, okay, gold and silver on the upturn, especially gold. Silver not as much. Kappa looking like they're gonna continue moving up. I don't know, man. If this breaks out of this consolidation and goes higher, that could turn into a wild thing really quickly, right? Japanese yen. So here you can see the yen responding the same as the treasuries, and the dollar getting a little bit weaker as a result. I'm not quite sure why the Japanese election affects it in this way, but that's what they're doing. And then there's Bitcoin. It's kind of developing a new range, it appears to me. Right? You had this range down in here. Now we're getting this range up here. Cool. There are some positive stories coming through in the crypto world. So I think that there could continue to be some catalysts positive to them over there. And we're probably going to continue to see these big risks that I think could just like destroy the entire cryptocurrency ecosystem. that will just kind of sit there and fester and nobody will do anything about it. And we're probably not going to have to deal with for quite some time. So still would be short-term bullish on Bitcoin. All right, let's see here. Now, I got to make sure to turn on my strategy. Should say it's really quite a strong bull move.
Order submitted.
Oh, okay. Just like that, huh? Well, it's a good thing I turned it on when I did. Oh, I need to turn off the speakers. Yes, okay. But it is doing the correct thing. So next, we kind of talked about it briefly, but we'll just pull over here. So next week is FOMC. We will get non-farms on next Friday, by the way. That's an important thing to note, that the 1st is on a Friday, interestingly enough. And here's this week. So we are in the blackout period, but Chairman Powell is speaking tomorrow, apparently, due to deliver opening remarks at the integrated review of the capital framework for large banks conference hosted by the Federal Reserve. He's probably not going to say anything significant in that. I don't think he's allowed to. So whatever. You do get existing home sales, flash manufacturing PMIs, core durable goods. But that's pretty much it for this week. And then again, GDP, Federal Reserve, and then all of the job stuff. So next week is going to be, the beginning of August is going to be a very, very packed, and busy week for us. So my robot is holding out the limit order there. I'm wondering what it takes for it to convert to a market order, or if it will if it can convert into a market order. Kind of thought that it should do it over and over again, but I'm not 100% sure. Well, it is doing the thing over and over and over again. Oh, I have a book threshold. What's the book threshold set to? 900. Okay, well. Oh, it got filled. That's why I'm confused. I was like, shouldn't it have converted into, no, it got filled at 06F. Okay, cool. Well, this should be an interesting test case for it. I'm actually not too bullish on the trade, to be honest with you. I kind of feel like we've been pretty buy all evening session, or all morning session, and we got a signal there and it ticked down and filled us. I don't know, man. Am I too pessimistic? Yes, it's been beautiful. I don't really see anything too significant. Oh, you know what? I should mention, on Friday, I was saying, well, I think that they're going to push and ramp ES going into the options expiration. And that is exactly what happened on Friday. So that was an excellent call on my part. Yeah, we should take the victory lap there. But that means this week, probably unclenching. I have not seen what the volatility structure over the next week looks like, but my recollection was that it should be ramping up into that Federal Reserve meeting, and then after that, because of non-farms. So I think that some market makers may have to make a pretty significant transition here, which means the open might be very, very significant. Well, I don't want to present this as a prediction because I've never watched something like this quite like this before, but I'm kind of thinking that they will just sell on the open. So we'll keep an eye on that, okay? Okay, well, poking around here, one of the things that's interesting is that I feel like that the the weekend action was unusually quiet as well, despite the Japanese election and all of that. So I think what I'm going to do here is I'm going to mess around in Pine Script a little bit. Senator Warren says crypto can, quote, blow up our entire economy. Well, I don't know. Part of me is afraid of crypto blowing up the entire economy, and part of me is like, nah, people will lose money, but it'll be fine. Okay, something that I've been seeing. So some weird things are going on in the trading world. I see two things going on in the trading world. One is that we had a ton, and I mean a ton, of people come in between 2020 and 2022. And what you're seeing now is the majority of those people have already burned out, and now you're getting to those most dedicated people, and those most dedicated traders are, you know, kind of saying, well, I've been doing this for like 2 years, shouldn't I be having success by now? Like, from everything that they expect, they think that they should be seeing success right now. What's wrong? And some of them are starting to say, maybe the strategy that I was working with doesn't work. So I'm seeing a lot more people shift from learning smart money concepts and moving over into order flow. Unfortunately, I'm also seeing a lot of them fall into methods of order flow that are just as much junk as smart money concepts, unfortunately. But it's interesting to see that much of a shift. I hope that we can get more people on the right track. I mean, if there's a thing that I would say to those people that will help them get on the right track, it's that technical trading does not really work on an intraday basis. Everything that you've heard about technical trading and trading patterns and all of that sort of stuff came from the swing trading world, not the day trading world. The day trading world was a completely different game, and what most humans were doing to make money from that game has been taken over by robots. So if you really want to day trade, you will have to take a different approach from what people did in the past, essentially. But that generally means looking more at the fundamentals and the news and trading those sorts of things rather than trading technicals. Because again, technical day trading, you know, like these chart pattern sort of stuff, that was never a day trading thing. There was kind of more order flow scalping and market making kind of strategies, but you can't do those because you're a robot. And so what are you left with? News, essentially. That's what will get you on the right track. Okay. The other thing that I'm seeing happen in the retail day trading world is mass numbers of people trying to get ChatGPT to trade for them. So one of the things that I'm seeing is people will paste in a chart and then GPT will tell them what to do. And I've seen a lot of people claim success with this, but it's like it's so mind-boggling, like man, how can people be this dumb? But you know, they'll post one chart in there, and if it works, then they're like, oh, it works, off of one or two tries. It's just bonkers, right? If I were to trade with a large language model, here's what I would do. And you might ask, well, Seth, if this is what you would do, why aren't you doing it? Well, because it requires a lot of resources that we don't necessarily have. We can kind of do some parts of this, so we can kind of try to get a little bit of it to work, but I'm not sure that we really have the information to really truly make this work. But maybe if you're like at an OpenAI company, well, obviously all the hedge funds and the banks, they're probably already in on this sort of a thing. But, like OpenAI, it really seems like they're investing a ton of money and they need to make a ton of money. And I'm not sure that the product is actually going to do that. Hey, this might be a way to make some money. So how would I apply an LLM to trading? Well, the key insight that we need for making good short-term trades is being able to predict future order flows. So what we really want to do is we want to set up an LLM system that helps us do that. And the thing is if I have some big data series and, I want to be able to predict that data series, there's all sorts of complicated things that can make it difficult to do that and or hide the patterns. And that's what machine learning is really, really good at. But remember that LLMs is not strictly machine learning. Like, you can't pass that data series into an LLM and get a good prediction out of it. It's not necessarily good at that. But what an LLM is good at is reading data and converting it into a different format. So like reading a zero hedge article and extracting any information in that zero hedge article that might help us predict future orders. So what you really want to do is feed that LLM a bunch of proprietary, data that's not necessarily public. So have it read a bunch of analyst reports and things like that, right? Have it read a bunch of analyst reports and then ask it to make, summaries. You can have a summary format that's like, okay, here's this instrument, the information in it suggests this much buying or this much selling, and kind of have it, list all of those things out. Then you can take those summaries, and because all of them are in the same format and there's maybe numbers in them, you can consolidate it, right? And then you're able to actually take that information and potentially push it into a machine learning algorithm to go and make really effective predictions. So if I was going to use large language models, that's how I would do it. There was a study very early on with all of this that was, do LLMs predict charts if you give it a picture of a chart? And their conclusion was no. It was actually really terrible. Okay, I'm just throwing, Herc asks, just throwing this number out, but is 100% not unusual for consistently profitable traders who have proven edge? Just trying to understand what would be realistic annual returns. Well, okay, this gets into a weird question, Herc, because if you look at in our space, the professionals that are making the most money in our space, which would be commodities trading advisors, them making 20 or 30% in a year is a gangbuster year. Yeah. So is it unusual for somebody to make 100% in a year as a retail trader? It's not unusual at all because you have insane leverage. And that's really kind of like one of the big problems is that you will have more success in the short term by being a degenerate gambler than you will from like having real edge. And that's one of the things that fools a lot of people in the space and leads so many people to methods of trading that ultimately don't work. Yeah. So that's why I always recommend starting small and not scaling up right away, even if you can. Because that would basically, what you're really trying to do takes 3 to 5 years. I think it takes many, many years. So I think that what we are ultimately trying to do is we're trying to build an intuition for the markets. That's really what it is. What our brains are a lot like large language models in many respects. And in order to be able to make predictions and things like that, you need a lot of data. You need a lot of experience. And so us coming in and analyzing the market as it happens, hearing all the news, hearing everything that people are discussing about, and seeing how that affects the orders that come into the market. And yes, that means that you got to see the actual orders, which means that you need to study the order flow. You can't just look at price. But that is what will allow you to build that intuition. And one of the issues that you will get when training a model is that there are certain lessons that the model can learn that are so significant that it affects everything else after that. Like, that's all they can see. And so they don't learn the other lessons. That's bad. So the order in which you learn the things kind of matters. The scaling up thing, because there is intuition to when you should scale up too. It's the last thing you should do. Scaling up is the last thing that you should do. You really, really want to make sure that you have a really good understanding of the order flow, a really good understanding of the news cycle, of the economic data that comes through, and all of the other things that we have. Seasonality is another big one. All of the big things that we have that can predict future orders. And when we feel like we have a really, really solid understanding of those things, and we're having some success with the trading, then we can think about scaling up. Okay. Now, if you are making 100% in a year, that's probably a sign that you're over leveraged. Probably a sign that you're over leveraged. And what we tend to see from people that do that is they'll do really, really well for a year or two, and then they'll just bust it all at once. So, now maybe you're getting that number. One thing that I have seen, and this kind of means that you're not having that problem, is you're still trading like minimum size and you've still made insane amounts. Because when you're starting with a small amount anyways, it's not as crazy to like double your money. Okay. But the takeaway there would be, don't read too much into it. Don't think, well, because I've made double, that means I'm like the greatest trader ever. And, that's going to lead you to making big mistakes. Right. So what I would do instead is I would say, well, there's a great deal of luck involved in that. I'm still relatively new. I should still, hold myself to certain, risk standards, even though I don't necessarily have to. That's how I would approach it. I guess part of the reason that I say this is that bigger picture, there is simply a limited amount of edge that we as retail traders can actually pull out of the market. So our conception of I think the phrase that always triggers me is, not your fault, Herc, but you said consistently profitable. I really don't think that such a thing exists in retail trading. Not anymore. The idea of consistently profitable kind of came from market making, because in market making edges, you will make money almost every day. You can make money like practically every day. That's the way that market making strategy used to work. But you're trading thousands of turns in a day, and you're managing like a whole inventory. So that's very, very different from like what we do as retail traders, right? They're going in and they're making a teeny tiny little, one tick on like practically every time that it ticks up and down. And what we're doing instead is like we're just picking a specific period of volatility to take advantage of, right? All in, all out often. Maybe you scale in, you scale out, but you know, there's just like to be coming out and making money practically every day from that, or to be making money every month from that. Extremely rare. Like when I've seen people that seem to be doing that, doesn't last. So that doesn't mean that there's not edge in retail trading. It's just it's like super limited, right? And usually the way that it's going to work for retail trading is you kind of tread water for most of the year, and then there's this one period where you really know what's going to happen before it happens, and you just make a killing. And that's what's much more likely and practical for retail traders. So I've kind of replaced in my mind the concept of consistently profitable with being in line with the market. Sometimes I'm in line with or ahead of the market, and sometimes I'm not. And that is going to be largely a factor of how well I understand that market. What's actually driving it? Do I understand those economic factors? Am I able to predict them before other people? Can I do that with everything? No, it's not. It's not practical to think that I'm going to be ahead of the curve all the time. Like, not as a retail trader. SMB traders are really big on that notion. They make 80% of their yearly profits from a small amount of trading periods. Yeah, that could be. And SMB is a different thing too, because SMB is trading stocks, right? So having the ability to monitor thousands of different assets and selecting one for that day that you know is going to do something is a very, very different game from what we do in futures, where we're watching a very limited number of assets. They all kind of are heavily connected to each other. If sometimes you're trading just one, like I trade just one, and so we have to know everything about that asset and know when it's good to trade and when it's not. And you can have long periods where it's not good to trade. I really feel like that this summer has been pretty dry. We've had short bursts, but overall it's been pretty dry for summer. Today it's been 45 minutes, I think. We're trading like a 6-tick range in ZV or ZN. That sucks. That really sucks. So, So, going back to this thing where it's like, I'm seeing that a lot of retail traders, they came in, they got brought into the space. They probably were brought in by some of these influencers like the Smart Money Concepts guys, and now they're kind of burning out. They're like, oh, I don't think that this actually works. What do I do? Right? Octavia says last month and a half have been tough. Yeah. Anyways, so where do you go from here? Well, I think that there's two directions. My direction is news and order flow. The other direction is swing trading. Okay. Now, the issue with swing trading is you have to have more money to start. That's the real problem. I think if I had more money, if I really had, several tens of thousands of dollars sitting around that it didn't matter to me. Because right now I've got tens of thousands, but I put it into college funds and stuff like that, right? So, but if I was beyond that, and maybe in 10 years I will be, I think I swing trade. what I've seen from my own swing, my own following of this stuff is that I would probably do better swing trading, but I don't know. But I guess so. I also want to segue here. You know, this kind of all started with me talking about AI, like, and I haven't even read this post, but this guy says, "Can AI really be trusted in trading?" Well, taking a picture of it and just asking it for your entry and exit criteria is like a terrible way to trade. You're not going to have success with that. One, because it's just guessing, so it's really what you're getting is actually random. But even if it was good at that thing, then you have to deal with some of these other problems. So, and there's really 3 issues I see with large language models as they stand right now. And these are problems that don't just go away overnight. Like a lot of people have been saying, well, yeah, but the large language models will get better. They have gotten better. Especially in coding, they've gotten better. Like in coding, I really think that it was like, we were just like, they picked up enough coding just from training it on all of the data on the internet alone to be like useful. Now they're making models that are specifically trained to code. They're getting pretty okay. But there are still these 3 fundamental issues with it. So what are the 3 fundamental issues that we're seeing with large language models? Number 1, absolutely the biggest one, is the accuracy rate. So large language models have accuracy rates somewhere in the 70 to 80% range right now. And the issue is that errors compound on top of each other. So if you have like a 70% success rate on any one individual task, and then you extrapolate that across a 5-step task, then that means that like only 30% are actually successful. So it turns out that in order to get agents, quote unquote, that are really able to like replace white collar work, you need something that is beyond a 99.9% accuracy rate. And we are nowhere close to that. And keep in mind that the further you go, it like requires exponentially more effort typically on these things to become more accurate. So to get from like the 70, 80% hit rate that we get to 99% is a huge lift. And we're probably like, that's something that maybe even 50 years from now with this technology, we don't get. It may require a significant innovation. Although those significant innovations may be on the way. For instance, there was that large language model that was like able to pass that math test. That's kind of been in the news the past few days. So there are some reasoning models coming out that might help on that one. Okay. Number 2 is the context window. So this is kind of a statistical problem that like the more context you give the model, there's a certain point at which you get diminishing returns. If not, like it actually makes it worse. So if you were to like draw this out on a graph and you were like, oh, where's my pen? Hold on a second. There it is. Okay. This is like effective. And this is context, size. It's like this, and it's actually I don't know how the curves might be, but it might actually be like this. So there becomes a point at which adding more context, it makes it more difficult for it to do the math, and it becomes less and less effective. And it happens to be that the amount of context that you have to stick into something for it to be effective is like more like this is what the context that we need, and this is what the LLMs do. Okay, so there's this fundamental context issue. Here again, I don't know how you deal with that. One of the things is getting the LLMs. You can only pass so many tokens into it, period, right now. So they are improving with that. They're talking about some changes that might allow them to have memory, more like memory, because they don't necessarily completely, like the way that they simulate this is ChatGPT will like save memories about things that you've said to it, and then all of that information is passed in to the query that you send it beyond just the text that you give it. Crazy, right? So there's a fundamental context window issue. Okay. The third issue is simply a question of efficiency and like, so all of these companies are losing money. Like you go every time that you use ChatGPT, it costs them more than you're paying for it. They're doing the kind of the model that we've all seen, where it was like they made the service really cheap at the beginning so that everybody uses it, and then when everybody's using it, then they make it really shitty. Yeah, they're doing the same thing with AIs. And when you go and you look at what it actually costs to run all of this stuff, and what it will cost to have models that can actually like replace white collar work, the humans are cheaper by a substantial amount. So you're really far. It's not to say that they can't make great strides in closing that gap, but some of these gaps really are fundamental. You would need, again, like fundamental changes in the technology, new technologies, leaps, things that you can't, you might not even get in 100 years sometimes in order to close that gap. So what that means is the most likely outcome is not that AIs replace us, but that AIs become assistants. I'll say that again. The most likely outcome is not that AIs replace people, but that they become assistants, that they work alongside people. People are, because, another issue is that AIs don't necessarily have initiative the way that humans do, right? So what you're going to see instead is they're going to say, here's our business, and here's what our business could be with all of the roadblocks and the things that we think are holding us back or taken away. And what AI does is it just smashes all of those roadblocks and allows a business to scale up to as big as they can become very, very quickly. So what do we want to actually do based on that? Well, so first of all, as investors, I want to be invested in small companies that have high growth prospects, because the number of companies that you see that go from, Russell 2000 size company to an S&P 500 size company is going to increase exponentially. It's going to be a lot of relatively small companies that can start doing really well because the things that are holding them back are going to be gone. For us as individuals in the job market, I think that it kind of suggests that you want to get good at training with the LLMs. They're not going to replace you, but being able to work together with them is going to be a big deal. There's, like the input that you give it matters substantially. Like two different people can get completely different results. So knowing how to prompt it correctly. And then there's all this stuff where, like, because the LLMs like learn things about you as you go and things like that, there's actually some degree of like building a relationship with the LLM. So being able to, and there might be some points in the future where there are people where they have an LLM that they've been working with for a long time, And that relationship becomes really valuable to certain businesses. I think that could happen. Those are the kind of things that I see going. If the large language models don't replace us, then the inevitable result is a substantial increase in the number of humans needed, actually, because we've removed all of the growth constraints. And in fact, I would argue when you kind of start to look at things from the perspective of like economic growth and interest rates and things like that, then you kind of start to see that it's inevitable, because you have these robots come in and they make this huge increase in efficiency. What is that going to do to the economy? That is a deflationary force. The Federal Reserve will have to print insane amounts of money to make up for that. If things go anywhere close to like what the singularity people think is going to happen, it means that they're going to print money. Where is all that money going to go? Companies are going to have to hire a ton of people. And there's going to be a ton of businesses starting too. That's another thing that I think is going to happen in the future, is more and more people are going to have to start companies. It's just kind of the inevitable result of the deflation that AI probably brings in. Okay, so let me read some comments here. 78% is still actually pretty good, assuming white collars are human. Human performance deteriorates over time. At least the LLM can consistently perform at that hit rate nonstop. Well, that's actually the interesting thing, is that humans are like 99.99% accurate. It's just that you have to look at like the everything, right? We're thinking about like only the really, really hard things, or the things that really, really matter. And then maybe the humans hit 70 to 80%, right? Well, we're talking even when you include the smallest little steps that you do. Humans are more than 99.99% accurate. I couldn't get ChatGPT to make presentations without plugins or send an email. When it will be able to do that and make changes in the Outlook calendar and analyze your emails and everything. Combination between Viva Insights and ChatGPT, the assistant roles might get out of the market. Well, okay. Have you? Maybe you should try Agent GPT that they released on like Thursday or Friday. Maybe we can pick that up this week. It has access to a web browser, a text editor, and the command line. And for things like an Excel spreadsheet and similar sorts of things, if they can be written in text, then the LLM can do it. And so they're getting there. Another generation or two of that, I think you could have something that's pretty useful. And then the other thing is there's the what do we call this? There's the protocol that allows the LLM to like drive the application directly. Once we start, now that's something that's really, really interesting to me is when we start building applications more to be used by an AI rather than by humans, that could get wild. But I still see that being a place where the human is still there. It doesn't replace you. It needs human oversight. We're looking at what it's doing step by step. A lot of what you're doing is more verification, enhancing. Octavius, let's discuss Obamagate. Sure. So, MAGA got a decent boost over the weekend by Tulsi Gabbard saying that they have evidence that the Obama administration was involved in fabricating the Russiagate controversy out of thin air to undermine the Trump presidency in its earliest days. Now, I honestly have kind of been a little bit meh about it, simply because I haven't seen the evidence. What I see is Tulsi Gabbard saying something, and meanwhile it's like, yeah, but we had like an FBI team and like prosecutors and stuff look at this very story for a long time, years, and nothing came of it. And now Gabbard is saying, well, I can't believe that the Durham investigation missed this. Maybe, or maybe there's things about it that you're not realizing. It just doesn't give you what you think it does. But Donald Trump was posting stuff like that they were going to arrest Obama. And you know what? I think that that's pretty likely. They'll arrest Obama, and they'll do it just like they arrested Donald Trump, right? Make a big deal out of it, big raid and all this sort of stuff. Yeah. Could get crazy. I don't know if it will actually have real significant political implications or not. If Obama gets arrested and or prosecuted for this successfully, it's certainly going to hurt the Democrat Party, right? But will it be enough to like really cement Republicans staying in power for a long time? I don't know if that's the case. Kind of seems to me like something that's like, you know, within the course of 4 years, everybody forgets about it. So, I don't know. So I think that's the most that I can say. I guess from a political analysis perspective, I would say I'd be a little bit skeptical of anything happening from it. I guess one other thing I will say is a lot of people are saying that this is treason. It doesn't fit the legal definition of treason. In fact, I'm based on what I understand about it, I kind of suspect that you can't be convicted for treason unless we are in an active war with somebody. So like the US has to have declared war against another country and you help that other country, then it's treason. So I don't see how what Obama did can be considered treason. There might be something prosecutable about it, though. Machine learning engineer warns of 2026 layoffs as AI native developers struggle to debug own code. Have you had much of an opinion of Wyckoff methods? Yeah, Wyckoff was a complete fraud, and I wouldn't read anything into the effectiveness of his methods. Wyckoff was essentially the OG day trading education fraud. Yeah. He was basically independently wealthy on his own. He didn't really make his money from trading. And then when he became really rich, it was from the education that he provided. There's absolutely zero evidence, empirical data that backs up anything of what he said. Was it old school ICT based on what you're saying? Okay, so I think that the thing is, I think that you can actually, there's kind of a hierarchy to the day trading space, like the education space. So at the top is really technical analysis. Okay. Technical analysis is the idea that the psychology of people and what they're thinking is accurately reflected in movements of the market. That's really, in my opinion, the definition of technical analysis. Because if we just say, the market moves in certain ways, and you can use that data to predict the future, that's just called quantitative trading. Okay? Like momentum is a quantitative trading strategy. Momentum itself makes no attempt to try and to explain why that effect happens. And in fact, when we go into it and people have studied it, and it took them a very long time to figure it out, but once they do, we turns out that momentum is probably a factor of the market microstructure, essentially. Okay. TA is that the psychology of people is reflective in markets. So because people's psychology doesn't change and tends to reflect certain patterns, you will see those patterns in the market. That's technical analysis, okay? Under technical analysis, there's kind of like these different branches. And one of the major branches in the day trading space is price action. The price action is the idea that the change in price on short time frames can predict future changes in price. The reason I pick on price action so much is because it's the most dubious claim of them all. Because every single piece of, there's been a substantial, and I mean a substantial amount of empirical, peer-reviewed research on this subject, and it all says that intraday prices are essentially martingales, and that there is not any information in the data series that effectively predicts the future of the data series. So, price action is kind of bunk. Okay. I would view Wyckoff. How do I spell it? It's Wycoff, right? Or maybe there's an H. No, there's a K. Wyk. I think you spelled it correctly, D. I think Wykoff. I think that Wyckoff is in a different branch. The Wyckoff basically says that the market goes between periods of accumulation and distribution, and canceled. That people, large buyers and sellers, manipulate the price in order to accumulate more. And that's what Wyckoff is. So maybe there's this relationship between Wyckoff and price action, but I don't know. And then under price action, there is smart money concepts, which says that market makers will have control over the market and push the market into certain areas to stop you out or trick you, only to go the other way. So this is an even more dubious claim, because if you were to look at the market and say every time that we push through a significant level, is it just a liquidity grab and then it reverses afterwards? No, it's not. When you really go into the statistics, smart money concepts is just an absolutely insane, bonkersly stupid claim. And then even larger, the way, you know, the whole philosophy behind it and what they claim is actually happening directly contradicts what the empirical data says about markets. And I mean, like, not just like how a chart tends to go, but like studying how these different actors behave and, you know, how the professional world works and everything. Smart money concepts is just dead wrong. Right? So one of the big issues that I have is that a lot of people try and put order flow under technical analysis. Well, you can apply technical analysis to anything, because what is technical analysis really? It's the idea that the market psychology behavior is reflected in the market data that we get out. I say no. I say that it is order flow is quant. The study of all of the orders in the market, including the limit orders. That's order flow. Now, I would argue that order flow can fit into a branch of quant trading called microstructure. Of course, order flow is the study of the data itself, but our study of the data kind of suggests that the statistical aberrations that you do find in order flow are not due to people's market psychology or anything like that, but are actually due to the structure of the market. That because of the rules, the way that a limit order book works, that's why you see those behaviors. Okay. So this is why I get really irked when I see people come out and say, you know, that start applying technical analysis to order flow, because it's a complete misunderstanding of what we actually know from order flow. And so you get a bunch of people teaching these patterns in order flow that are absolute junk. Yeah, I started to cut the popular understanding of names and rely on my own understanding, so I cut it into two technical analysis, so it's just numbers related, and fundamental analysis, which is micro macro economy. Well, okay, but even that framework has issues, right? So that is traditional, is that there's technical and there's fundamental. So people's existing positions. How many people are short a ticker? Is that technical or fundamental? Well, I don't think it's fundamental. So the way that this usually works is it fundamental? No, then it must be technical. That's the way that people actually do it, right? So we say short percentage. Short percentage. Okay. Momentum. How much something has moved up in the past month relative to, so like, let's say cross-sectional momentum. How much this asset has gone up relative to other assets that month. Is that technical or fundamental? Obviously, that's fundamental. Options position. Gamma, right? correlations. Is that kind of... But kind of what happens is when you start going into all of these things, you kind of start to realize that this dichotomy doesn't really make sense to split them into those separate things. Because it's like, well, what like moves the market the most? What is like the most predictive thing about where the market is going to go? I would argue that it is the amount of contributions and distributions from index funds that month. Okay. Index funds. Is that technical or fundamental? Well, there's kind of a hint of that it has something to do with the macroeconomics, so maybe you could put it under fundamental. But it's not, it doesn't tell you anything necessarily about the health of companies or the health of the economy as a whole. It's completely incidental to that. It's almost in some cases seemingly random unless you have the data that's able to make up and predict that, right? So maybe you put it into technical, right? So in the end, this kind of like this dichotomy doesn't make sense. And then on top of that, you know, this is not what when we split it up like that, that's the way that most retail traders in their minds think about what is technical or fundamental, whether I'm looking at the fundamentals of a company or the market data. And that's to them what technical or fundamental. But it doesn't reflect this more fundamental idea in technical analysis that market behavior is reflected in the prices. You go and you read, got it over there, the technical analysis of stock trends, which is like the OG book on this stuff. And they list it out. It's kind of funny because they kind of go through it. It's like, okay, technical analysis is stuff that's not fundamental. And it's very difficult to predict price, but assets do have a tendency to trend over very long periods. They start with that, and that's all cool. But then they go into, and there's all of these patterns, and they reflect the market psychology at that time. And so you can kind of predict how these patterns are going to play out. That's nonsense. And that's like the fundamental idea behind almost all retail trading methods that is holding people back. The ultimate issue here is that technical analysis as a theory is wrong. Once you get away from the technical analysis theory, then you start finding interesting stuff in the quantitative space. You just have to abandon this idea that the data that you're seeing is perfectly reflective of what's actually going on in people's minds. It's not. And by and large, what happens in the market is much less a factor of what people's psychology is and more a factor of liquidity, money supply, market microstructure, etc. This is why whenever people start to talk about the psychology thing, that's when I come. Part of the reason why technical analysis people get so hyper focused on the psychology is just like, in order for me to be able to predict what other people's psychology is going to be doing and to predict those moves, I have to have complete mastery over my own psychology first. That's why they do that. But the reality is actually the opposite. The market psychology actually happens because of the money supply and the market microstructure and all these other things, right? Like they say, when the market is low, that's when fear is its highest, and that's when you want to buy in. No, that's not what's happening. The reason people are selling usually is because they have to. They're forced to sell. They are forced to sell because They don't have a job. The assets is all they got, and they have to sell those assets to do things. If it was that simple, then why doesn't everybody buy the dip at the depths of a recession? It makes no sense. If we know that the way that it works, and you want to buy when everybody else is scared and those sorts of things, why don't you? Because most people can't. That's why you have in a bear market. The psychology, you see, they've confused cause and effect. The psychology, the reason people are scared is because they're losing insane amounts of money. They're not losing insane amounts of money because they're scared. Otherwise, people would be losing money all the time. Because I don't think I have ever seen a time, I don't think I've ever seen a time since I've been involved in a market where the prevailing online sentiment was optimistic. Never seen that. It's always decidedly pessimistic, that there is some big, huge problem in the market, something that we're ignoring that, is about to break, and then that's just going to send the whole market into a tailspin. Doomers have always been the dominant narrative. And when I see markets moving up and making new highs, I see skepticism more than anything. How does that make sense? It just directly contradicts what technical analysis people say. And why is that? It's because the theory is wrong. The market does not reflect the psychology of the participants at all. The things that are more predictive are money supply, market microstructure, the way that various institutions, their strategies work, etc. Those are the things that we're using to predict markets, because they've been shown to actually be predictive of future orders. The market psychology is not. In fact, pretty much all of the data that I've seen, sentiment does matter to an extent, but everything that I've seen is that sentiment is kind of a result, not a cause. So there's my rant about technical analysis for the day. Instead of getting too much into Pine's script here. But all I wanted to do was make sure I found this thing that says, let's get the time frame. Input that time frame. Does their editor give me help? Title deval title options. Do we need to use overnight volume profile to trade in RTH? It doesn't matter. Volume profile is not a very predictive thing. So you want to have the volume profile up because you want to see the volume as it develops. But once it's volume that's more than 45 minutes away, you know what I should make is I should make a volume profile that for every order it falls off, so that what I'm seeing on my volume profile is actually a volume profile of the last 45 minutes or 90 minutes or whatever I set it as. Because from my own research, well, I mean, there's some studies that kind of suggest this, but some of this is a little bit my own observation of it. Volume becomes irrelevant once it's been 45 minutes. It's a good idea. Yeah. Yeah, I'm having some issues, D, like, okay, so can I tell you something interesting and maybe a little bit too personal, but I think you guys will find it interesting. And I posted this on my TikTok, but there was this trend that was like, ask ChatGPT, what is my curse? And a lot of people got posted like really simple, like 1-sentence answers that I thought was kind of weird. Maybe they're just like pulling out like one portion of what the LLM says. But ChatGPT in particular, I've spoken with quite a bit. And so it knows like what I'm trying to do in my plans and things like that. And it said that my curse is that I have clarity. Was said that clarity is a good thing. It's actually a rare and useful thing is what, well, what, maybe I can just read it off. I should probably just read it off. Your curse might be that you see too clearly. You're not satisfied with the surface explanation, with doing things the way others do, just because they've always been that way. That's a gift, but also a burden. It can isolate you. You see the inefficiencies, the misinformation, the fragile assumptions, especially in markets and economics and institutions, and it makes you want to fix them. But clarity without power can feel like torment. So I know that the LLMs is kind of a lot of a mirror especially when you're talking about things like this. So really, this is saying a great deal about me, isn't it? And I think that it's accurate about how I see myself. I think that I have some insight into the markets in the world that has been neglected by the world. And it really just makes you feel like powerless, because knowing that without the ability to do anything about it is kind of grating, you know? I'm constantly thinking about like, what am I going to do next and everything. Sometimes I ask it, is these good plans, whatever. It's always like, oh, that's a great plan. And if I try and get it to like tell me what I should do different, it doesn't. It can't come up with its own thing on its own. So I struggle with where should my focus be, because I don't have a lot of time right now. I think that it might be a lot of bide our time until October and then we see where things go from there. I'm not super pleased with my current arrangement just because we don't have a whole lot of time to work on the channel. That would get better if my wife wasn't working weekends, but it's awfully frustrating. And then when I do have time, what should I sit down and program? Well, I really, really enjoyed making the inventory cost basis indicator for CR charts. I don't know if anybody is going to use it outside of Octavius, but that was a good change. And I think that converting that over into PineScript, which it looks like I might not be as accurate in PineScript, but I think that we should be able to get something that works there. I think that's good. I think we're going to do that. But what do I do after that? You know, I have a lot of different choices. I could focus more into making videos again. I would like to make a video about what we talked about here today, the problems with LLMs, why it's unlikely to replace us, and what is likely to happen from that. And I've actually found some research that kind of goes into this as well. We could make a video about that. We could make a video about what I talked about here today, about like what actually is technical analysis and the problems with it. Or I could just start programming really hard in trying to make a new strategy, maybe an LLM based strategy, or maybe I could go really hard into making my own day trading platform. I kind of feel like I'm kind of putting off the day trading platform because I'm just not sure if the frameworks and everything, the technology is actually really there. But, you know, a volume profile where the volume comes off after 45 minutes, I think that's a really interesting thing. That would be really interesting. I think I know how I would do that. I would keep a volume profile for every bar and then just add the last X bars together. Or add the new bar and subtract the bar that's coming out of the window, right? Could totally do it. But it would be a Ninja Trader, and I don't know. It would be more valuable if it was on the Jigsaw DOM. I don't know. So how do we find scalping trades like absorption or icebergs or unbalance? Okay, so I have a video about order flow, and I would just go and watch that first. If you haven't watched that, I would go and watch that. And I talk about things like absorption, icebergs, and balance. But we'll also go into what are the limitations of those things. Okay, you watch that and then come back tomorrow, and we could have a more deep conversation about it. But for now, it's time for me to leave. I gotta go. This is the thing that sucks, is we only get 90 minutes together. I don't know. If something happens in October and I end up unemployed again, like this contract ends and I don't have another gig lined up by then and they don't want to hire me on full time, which I'm kind of concerned could happen just because I don't think they can afford it. Maybe I stream longer. Like when my wife is home, I just stream until market close, maybe. Because I'm really seeing the difference with how long you stream. It makes a difference. All right, guys, I gotta get going. See you tomorrow. Stay excellent, team.